This is David Vidala from RBMG. High Tide Resources is listed on the Canadian Securities Exchange under the symbol HTRC. Joining us today is the company's president and CEO, Steve Roebuck, who will be going through High Tide's March investor presentation. This will include an overview of current operations and upcoming milestones. Please note, this presentation is being recorded today, Wednesday, March 2nd, 2022, and will soon be made available on the company's website at hightideresources.com. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. High Tide has a full disclaimer on page 2 of their presentation. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. And now I'll hand it off to Steve. Steve, the stage is yours.
Thank you, David, and welcome to pretty well the first High Tide Resources webinar. We just went public last week, so it's a very exciting time for the company, and I'll get into that a little bit of detail as we go forward. But opening slide here, we're advanced stage projects, secure locations. We're the commodity mix with sustainable value. We're located in Canada's Labrador Trough, which is safe, secure, and accessible. This shot here is our adjacent property to us. This is the Carol Lake mine, which is run by Rio Tinto IOC. They produce iron ore concentrates and pellets. So we've got the project adjacent, just a little bit further up the belt. But this is the proximity to the infrastructure that we have. Just moving along here. Pardon me. So as mentioned, we're listed on the Canadian Securities Exchange. Our ticker symbol is HTRC. We are a spin-out from the parent company, Avidian Gold. We dividended 9.4 million shares to our shareholders recently. As mentioned, we are up and trading. We're trading at roughly about 15 cents at this point in time. The company's projects are Lac Pegma and the Labrador West. At our Lac Pegma, we've got copper, nickel, cobalt, and zinc. And then really at our flagship property at Labrador West, it's a large iron project, very close to all the required infrastructure. The project's being located in Quebec and Labrador. We've got some of the safest jurisdictions in the world for investment. The commodity focus is on essential commodities required for infrastructure development and renewable energy technologies. And we're positioned to move very, very quickly, and you'll see that coming up. The share details, as mentioned, again, we listed just last week. Pretty well, most of the shares of the company right now are actually in escrow. From Avidian's perspective, we are the largest shareholder up there, single shareholder with 33% of the company. Altius, we've taken the project from, the Labrador West, is next in line with about 19%. And the new shareholders who have participated in some of the last financings, et cetera, with 23 million shares outstanding. That's essentially the float of the company. Important to note right here is the balance sheet is very strong. We've got $3 million and absolutely no debt. The team is led by Steve Altman, who is the chairman and a director of the company. Steve is in the investment banking side of the equation. Myself, I wear a number of hats at this point in time: interim CEO, president, and director. I've been working on this project and these projects and the formation of this company now for over 2 years. So glad to have brought it to this point in time. And then the rest of the team are experts in their field, with Joe Pavaromo, who is very experienced in iron ore. Serge Pelletier is a gentleman that I worked with at BHP Billiton. And Carol Seymour is a very experienced geologist who was born and raised in Labrador City and has basically DNA or iron ore in her DNA being born right there. So I mentioned off the beginning, Canada's Labrador Trough, safe, secure, accessible, and that's really important. All the infrastructure is in place. The rail is in place. The hydroelectric power is there, rail to port, and then port loading facilities. The map on the left, you can see a number of the projects. You can see in red our two projects, Lac Pegma, which is your battery metals project. It's over on the Quebec side. And then the Labrador West, which is adjacent to the Carroll Lake mine. So you can see this is the Labrador Trough is kind of Canada's Pilbara, in which pretty well all of the iron ore currently being mined in Canada comes from this region. Just a bit of a closer snapshot of the immediate area of the Southern Labrador Trough, again, focusing in on our Labrador West Iron Project. It's our flagship property. And what we're going to do here is this is an opportunity to daylight a brand new project in an established iron camp. We've got our target is for our maiden resource is roughly 500 million tons, but we've, by analyzing the historic work that we've got and looking at the geophysics, we think that 1 to 2 billion tons is has got potential there. So we could grow a very large resource. We've got a big project size area. There's low cost power in the area. And then to the southern part, to the south of this map, you're seeing our Lac Pegma project, copper, nickel, cobalt, across the border in Quebec. Interestingly, it's transected by a Hydro-Quebec power line, so that's incredibly fortuitous. There's been limited exploration on the project. I think we can do quite a bit of work on that this year. Again, same size project, around 2,400 hectares in size. There's really important to note here is that there are 4 operating mines, all iron ore mines in the area. So all the infrastructure, the rail and the hydro, the workforce, highways, etc., are all in place in town. So this is very important for any project, especially on iron ore, to have access to infrastructure. Looking at the project itself, its exact location, the deposit itself. This was a former Rio Tinto project. They drilled 18 holes, approximately 4,200 meters. We came along in 2020. We added to that with an additional 4 holes, 1,000 meters, and we completed a technical report in 2020. That's, we've taken it to this point in time. In 2022, we are going to that next step. Just to focus a little bit more on some of the historical work or the recent work that we did in 2020. The yellow indicates the location of those drill holes. And then this is a section view. You can see the 2 holes on the outside. They didn't quite reach their target depth, but the 2 holes in the center of the deposit did. They went through over 300 meters of iron, exiting into a quartzite formation. So we know that we've really drilled to find the best of that iron ore. You can see 27% iron on the left side and almost 30% iron on the right side hole. That's pretty well very standard for the grade in this camp. It comes out 28 to about 32% iron. It's upgraded into a concentrate or a pellet and then sold to the world's market. What we did in 2021 is that we relogged some of the historic drill holes that Rio Tinto drilled in 2010, 11, and 12. We've done metallurgical analysis. We've sent that to a group out of Quebec City called Corem. They are global leaders in iron ore. And what they were allowing us to do is to standardize our lithological codes and to do a metallurgical test work. And that work is ongoing. We've updated our geological model. We've got a drilling contract currently, a drilling company under contract, and we're fully permitted for drilling. A little bit similar. Let's look at the map on the right-hand side. If you want to look at this area here, there's approximately 5 to 7 holes that we're going to drill. Then drilling starts as soon as the next 4 to 6 weeks. We hope to begin drilling in early to mid-April, 1,700 to 2,500 meters in total length. Basically, it'll be these green dots that we're drilling. These are the historic drill holes that you see here. We are going to use that to get to our inferred resource, the green and the blue holes that you see in this area. So those are the 5 to 7 holes. We drill off this, we get 500 million tons. If we would expand the drilling to out here, this is where we're going to get about 1 billion tons in the inferred category. So we are going to daylight a maiden resource as early as this autumn. And then we are going to commence a PEA level study and really start to advance the project. So things are going to happen really quickly in the next 6 to 9 months. You're going to see a lot happening here. And this slide, I think, really shows it all in terms of the project's development, in terms of tasks on the left-hand side and value and timeline on the x-axis below. So starting out with resource drilling, coming out with the maiden resource sometime over the summer, and then moving towards that PEA level study. So we think that we can rapidly advance this project. This is not something that's going to take years and years. We are in a very good position right now to move ahead on that. Now, just to speak quickly about our Lac Pegma project, first discovered in 1955, then drilled in 1996. It's a copper nickel cobalt deposit. There's also a small zinc deposit a little bit to the north up in this area here. We also found graphite when we were drilling back in 1996. And I have a history with this project, having drilled the discovery hole in 1996. So it was a very exciting time. And 25 years later, I find myself back at this project. So this image on the right-hand side, that's me in the red sweater taking a look at the drill core back in the day. We were living in tents in the middle of the winter. And that's me this summer in 2021, revisiting some of that historic drill core. We've got a non-43101 compliant resource of about 2 million tons of 0.62 copper, 0.34 nickel, and 0.3 cobalt. And again, just mentioning that zinc resource, again, non-43101 compliant, it's about 500,000 tons of almost 2% zinc, but only 13 holes in that. There's an awful lot of work that still needs to be done there. Just a quick snapshot of some of the more interesting intercepts. By the way, that is not me, that is our driller, smoking and no glasses at the time. That's, I guess, the way they rolled. Here you see the drill width. So you're getting good intercepts in meters, and this is your copper grade, and this is your nickel grade. For example, hole 27, 18 meters of 0.73 copper and almost 1.2% nickel. That's really good. And we have never found the roots to the system. So we don't know exactly where this came from. So if there is a chamber at depth that this is the source point, it has never been found. So it's a very compelling project that we can move forward on. And I just want to end with one slide here that really looks at a comparable iron ore project for high tide. And it goes back a few years to 2012, 10 years ago. But this is a company in Liberia that sold roughly about a 40% stake in their project to a Russian steel producer. And you know, as good luck would have it, the price of steel or iron ore at the time was in about 140 to 120 range. That's exactly where we are right now. We are at about 147, so almost a little bit higher. And you know, the project was a little bit further advanced, 75,000 meters of drilling, indicated and inferred, slightly larger resource, around 1 billion tons, but 34% Fe. It's a good Fe. But the royalty was 4.5%. Ours is 2.75%. But this is the kicker, guys, is that there's no infrastructure. The closest airport is 320 kilometers away. There's no town, no labor, no electricity, and it required a 120-kilometer railway to be built. At the time, well, as it says, they're $140 a ton, but the equivalent here was about 9 cents per ton. That's what the in situ value of the project was roughly about 9 cents per ton, which is really interesting. Because if you take that same metric and you apply it to what we're targeting between 500 million tons and 1 billion tons in that range, That gives us relatively a low end of roughly $45 million US up to $90 million. So again, and we've got all that infrastructure close by. It's really it's an interesting time for us to be daylighting and bringing to the market this really incredible iron ore project. Here's an interesting metric that we can look to and say, hey, can we repeat that? I think that's possible. Incidentally, they sold the rest of the project some years later for I do believe about $190 million. So that was only 38% sold for roughly 9 cents a ton. So very interesting metric here indeed. So again, I'm available at any time for emails, phone calls. Happy to take your calls and your questions. And I think that's about it. Well, there's one more here. This one's called the Kami deposit. This was a company called Alderon Resources. They're a little bit to the south of us. So this is not in Liberia. This is actually in the same, Labrador Trough, same camp. This was a project that went off the market as recently as 2 or 3 years ago, just before iron ore caught a bid. This project, unfortunately, ended up in a scenario where they took on debt. They couldn't repay their debt, and unfortunately, they had to go into bankruptcy. So, but before they did that, this is an example where their market cap was roughly about 9 cents a ton as well. They own 75% of a project, and I thought that that's an interesting metric as well. Again, similar price, 9-10 cents a ton. So I think this is it's an interesting opportunity for us to potentially be the next Kami deposit. And there's no other projects that are in the hands of a junior right now that are being developed. So it's a real opportunity to really step up and have a brand new project, so close to all the infrastructure, close to Labrador City and existing producers. So I guess that's about it.
All right. Thank you, Steve. That was great. I do have a couple questions for you.
Yeah.
The first question I have is, what is your take on the iron ore market today, considering today's macroeconomic environment?
There's so much going on right now globally, obviously, with Ukraine. I certainly know that all the iron ore production is fallen off from the Ukrainian iron mines, and they do have several global scale producers there. The price right now at 140, 145, I think it's a really good price. Last year, I think iron ore got a little bit ahead of itself. And we're talking about FE62. It got ahead of itself, went up to $200 plus a ton, came back, and it's moved its way back up from about 100 now to 140 and $50 right now. I think the price is strong, and it's probably resilient for a long period of time. I know that the people who price out iron ore have been raising their longer term expectations to $100, $120 going out to 2022, 23, 24. That's really favorable for a company like us. I think and I start off by reiterating safe, secure Canada. And I think that's really important for everybody. Somebody who's going to put a lot of money into the development of a large-scale iron ore project really wants to ensure that their investment is safe. And this really, the unfortunate situation in Ukraine, hammers home that requirement that if you're going to put that level of investment in, you want to be investing in places where you can trust that your asset will be your asset for a longer period of time, and they're not going to be disrupted by acts of war that you're seeing right now. The iron market is strong. There's always fluctuations, to the up and the down, but I think it's actually really good right now. And I think I just want to touch on one last part of it, is that in iron ore, there are many, not every bit of iron ore is made the same. There's material that comes out of the Pilbara and the parts of Brazil, comes out of the ground, at 62%. So that has become the benchmark. but there are deleterious elements within that. So it doesn't make for the cleanest of product. And I know that there's other iron products that, 58, 56%. The steel makers in China and the steel makers globally are looking for a higher quality, higher purity iron product that has less deleterious elements, that is easier to turn into a steel, so that their carbon footprint is less and less and less. And that's really important, and why the products that come from the Labrador Trough, from Quebec or from Labrador, are in demand everywhere, and actually demand a premium above Fe62. So for every 1% above that, it's $5 to $10 to $20. So a product that is coming out at 66, 67% concentrate could actually be seeing a $20 to $40 premium for sure on top of what their your Fe62 price is. You could be getting $180, $190 a ton. So again, it's a product in demand. It's a location that is the right location. The infrastructure is in place. I think this is something that we can develop a project very quickly, and it's really an in-demand project for the global iron market.
Great. Just one more question. If you could just elaborate more on the plans for High Tide in 2022.
It's definitely starting with Lab West and the iron ore, flagship property. I signed a drilling contract last week. Been talking to the helicopter company. I've secured a helicopter, so we've got everything that we need to move the project forward. I think that again, within 6 weeks we could be drilling a project that would likely take about 6 weeks to complete. Once we log and sample and analyze the iron content, ship it off to the assay labs, we get this information back the summer of 2022. Then we come out with our maiden resource, and then from there we start a PEA level study. So once we get into that resource area, that's the time that we can turn our attention to our Lac Pegma project, and that's battery metals. That's incredibly important. Copper, nickel, cobalt, very much in demand. That's when we can turn our attention to that. That would be sometime in the summer. So starting with the iron and then pivoting towards the battery metals. So I think it's going to be an incredibly busy year for the company, but that's our plan for the next from 1 month to about 9 months from now. That's what you're going to see. Steady diet of good press releases and exciting movement in the commodities that we're in.
All right, sounds great. Thank you, Steve. And today's webinar recording will soon be made available on High Tide's website. If there are any additional questions that have not been addressed in this webinar, please feel free to email us at hightideresources@rbmilestone.com. Again, that's hightideresources@rbmilestone.com. And thank you again, Steve.
You're welcome. Thank you.